with that story. Kate, so they want to let people trade bankruptcy claims, basically.
Yeah, exactly, Mel. And there are a lot of bankruptcy claims out there. Three Arrows is one of the companies that last year during the summer filed for bankruptcy. And this hedge fund was really one of the biggest names in the space, in the industry. It managed about $10 billion at one point and then became one of the biggest failures of last year. So filed for bankruptcy in July, is still in the middle of its own liquidation and dragged down a lot of other big crypto companies that were counterparties for Three Arrows. Flash forward to this weekend. The founders are now trying to woo investors for their next venture. I got a pitch book sent to me over the weekend, and it outlines a crypto exchange, essentially, that they're calling GTX, so potentially a play there on FTX. It's looking to make a marketplace out of all of these bankruptcy claims. So there are a lot of different companies that have filed for bankruptcy this year, FTX among the biggest, with a million or so creditors. You've got Celsius, BlockFi. So they're looking to really make a market out of this. There's people that have claims locked up and want liquidity for other things. So seems like a risky venture to make a sort of derivatives market out there. But they're putting it on paper. They're pitching it to investors. They're looking to raise about $25 million. But the irony here that they are one of the biggest companies that went bankrupt themselves. And liquidators at the same time have said that these guys are not cooperating with their own unwinding process. And the two founders, Kyle Davies and Su Zhu, were served subpoenas over Twitter last week because the liquidator said, hey, they're not cooperating. We don't know where these guys are. They've pushed back on that. But some of the latest drama in crypto playing out, Mel.
It's amazing the vitriol unleashed on Twitter, at least, that I've seen towards these guys. I mean, first of all, GTX seems like a horrible name to choose, given the similarity to FTX. Any play on FTX seems like a bad play. And the gall for them to offer creditors an equity stake in the new venture in exchange for those claims. I mean, there's so many things about this that just seem, I don't know, reek of hubris.
You're right. That has definitely been the feedback and the takeaway from this is that these guys have not unwound their first failed company, yet they're looking to launch a derivatives product for the bankruptcies that are still unwinding. It's unclear that any investor would want to take on that risk, and they peg it at something like a $20 billion opportunity. And it's really hard to wrap your head around this idea working, and not to mention regulators saying, or bankruptcy courts nonetheless saying, you know, that's fine. You can sell off your claims and use it as collateral for other loans. So it seems like if this is the case and people are interested in this idea, they do get backing. The idea that you would go ahead and make some of the same mistakes that really led to this, which are leverage, derivatives, taking on too much risk. It seems like deja vu. Wild that we're getting this pitch book. We'll see if they have any success raising money.
Yeah. Kate, thank you. Kate Rooney. Still ahead.